Good morning, everybody. Happy Monday. It's April 1st, 2024. Happy April Fool's Day. I got the who going with won't get fooled again. You could probably draw that linear relationship. Great to be with all of you today. My name is Bob Lang, and it's time for our Daily Bites. First of the month, first of the quarter. So let's take a look at the markets here and see what we can figure out for this week. Of course, we had a big week last week. We had the end of the month, end of the quarter fell on Thursday. We had Friday was a day off, of course, for Good Friday. Yesterday was Easter. Hopefully everybody had a nice, happy Easter Sunday. And today we get kicked off to a new quarter, a new month, and futures are up a little bit, coming a little bit off their highs from earlier this morning. Of course, let's take a look and see where we were and where we're at right now. So we're at 4 handles right now, almost 5 handles. Dow is down about 20, so we're kind of mixed here right now. But when I woke up this morning, we were up probably about 18, 19 handles, and we've been drifting lower ever since. So, we'll see if that trend continues. Probably one of the reasons why is because volatility is starting to edge back up. We see the VIX is up about 73 cents. VIX futures are down about 2 cents, but the VIX futures, VIX cash up 73 cents. That's up about 5, almost 6% today. And that's really basically payback for last week. We had a big drop in volatility towards the end of the week, as we often do in front of a 3-day holiday. And now it's kind of a bit of a payback. With the volatility rising, we would normally expect that the markets would come back down, but that's not the case at this point in time. We have another hour or so before the market opens, so you never know what's going to happen. So we see some of the pull up in volatility futures here on the bottom chart. So we'll see how it goes. I think it's going to be an interesting day, an interesting week. Not too much activity on the earnings side. Now, of course, some names are going to be coming out this week, like Levi's, PVH this morning. I'm sorry, later on this afternoon. Kura Sushi, KRUS is the symbol there. Greenbrier, a few other names as well too. BlackBerry on Wednesday night. So some of these names are much smaller, not traded too much. Some you may have heard of, some you may not have, but that's okay. We don't really have to focus in on earnings until maybe the following week, when earnings from the big banks are going to start trickling in. I think they come out starting on the 11th and the 12th of April, and then we get into a much heavier week of earnings the following week. That would be the week of the 11th. So week of the 15th, April 15th. So so let's see what happens. So markets had a closing high on Friday at new all-time highs, new weekly closing highs, right? And that often means that we're going to see a little bit more upside following. Does it necessarily mean today has to be up? Of course not, right? We're trend followers. We're not day traders. Well, some of you are day traders, and good luck to you. Hopefully you catch a few wins here and there, but for the most part, we're following medium-term trends in the markets, and it allows us to if we buy some time with identifying some of those medium-term trends, it allows us to stay with positions a little bit longer and let them play out and let them work through to try and get to a good profitable level before we sell those positions. All right. Names that looks like they're strong a little bit this morning. We got a little bit of strength in Microsoft and Amazon this morning. A couple of Dow industrial names. Nvidia's up a little bit here. Broadcom's up here. We're seeing some good strength in Delta Airlines so far this morning. UPS. I suspect the transports are real strong today with those two and a couple of other names as well too. We have a. I'm going to go back to the TD Ameritrade chart here and show you some of the charts. Here's the SPY chart, and you can see on the daily chart it's been moving really, really well here. But NASDAQ and New York Stock Exchange oscillated. This is what I really wanted to show you. Not overbought, both at about the 69.70 level. And that means that we've made higher lows. And if we get above to that 100 level, that would be something that would be a really nice accomplishment. But approaching an overbought reading, so we have to be careful with that too. So I suspect that we're going to have some sideways movement here over the next several days to watch what's going on. So watch what's happening with the bond market here. Bond market is down this morning. We see yields starting to rise up this morning on the long end of the curve. So we got to pay attention to that. And let's see here. Also, let's see now. SPY is up about $1 here this morning. And I like the action in the indices right now. Again, closing at all-time highs. Specifically, I like the action that we've seen in the Russell 2000. So let's take a look at that. And I know a lot of you are going to say to me and complain that, hey Bob, looks like a topping tail was put in on Friday, and you would not be wrong, right? So. But trying to guess where this train is going to stop has been a futile exercise here. And in fact, if you take a look at this chart since the I don't know, let's say the beginning of February, this 20-day moving average has, for the most part, been really good support, right? So we are extended away from this 20-day moving average. And remember something: moving averages work like magnets. They pull the price back down. Or if the price is low, they pull it right back up towards that magnet, right? And that magnet being this 20-day moving average is a really important one because it's about a whole month's worth of trading, right? It's enough data points to give us an idea of how the short and the medium-term trend is working. So I like to use those this 20-day moving average on a regular basis. Sometimes the 10-day moving average. I'll use half of that to get see how quick that trend is being made. But this 20-day moving average is important. So we're a little bit far away from that. The 20-day moving average comes in at about 205. We closed at 210, and every time this IWM or Russell 2000 gets too far away from that moving average, it tends to pull back in. So could it pull back in while the 20-day moving average continues to move up towards it? Absolutely. And again, people are going to look at this pattern that came out on Friday, this topping tail, and say, okay, this is a good time to take some profit. So I would be looking into that zone between about 206 to 210, where it is right now. Perhaps add a little bit more. And if it comes back down to that 20-day moving average, round out, fill out that position, and add some more. I'm in some calls, some long, medium-term calls about May calls on this one. I've got some longer term ones as well too, out to July. I like the Russell 2000. I like the action here, and I like the fact that it's about 10% away from an all-time high, where the other three indices, the Dow, the NASDAQ, and the S&P 500 have already hit all-time highs. So I think that this one is primed and ready to go up to those levels. For the year, S&P 500 and the Russell 2000 and the other indices are up, but not nearly as much as the explosive options portfolio. So you can see we're up 16%. And S&P 500 is up about 10. Very, very strong showing for the S&P 500 in 2024 so far, especially coming off of last year's 20% gain. NASDAQ, after being up 53% last year, is up a very respectable, very strong 8.5%. The Russell 2000, after being up 15% last year, is up about 4.7% so far in 2024. I mean, similar to a 10-year yield, close to it. And the Dow Industrial is about 5.5%, also very, very strong, respectable. On an annualized basis, the Dow Industrials, 22%, right? Because if you multiply this times 4 quarters, an average of about 5.4%, 5.5% per quarter would bring you to about 21, 22%. I mean, coming off of a year where the Dow Industrials were up 13.7%, to come in at 21%, it would be pretty phenomenal, right? Pretty strong. Of course, last year S&P 500 was up 20%. The explosive options portfolio up 35%, and we're up 16 so far. So that's what we're doing so far this year. I want to show you a couple more charts. The New York Stock Exchange, we look at the NYHL. Today I want to look at the NAHL, which is the NASDAQ highs and lows, right? So this is a different look, and you can see that most of these prints for the NASDAQ highs and lows have been above zero, right? And that's how we define whether the conditions of the market are healthy or not, right? So here's the box above zero, and we can see we've had some prints below zero, but they all tend to seem to correct here, certainly since the end of November, beginning of December. We've had some really good, strong readings on the NASDAQ 100 here, with good, strong prints above zero, above 100, and even above 200. We had a 230 print on Friday. So very healthy market here. That's according to this breadth indicator. Very healthy market according to the McClellan oscillator, which is in the plus column. We have strong results for the NASDAQ so far in 2024. We've had good volume. We've had the indicators that are telling us that the bullish trend continues to live on. So what's wrong with it, right? Well, it's been this problem for the past year and a half. Is it a broadening out of the rally, or is it just a few stocks that are really enjoying the upside? I think right now we're seeing much more of a broadening out, whereas last year it was about 7, 8, 9 stocks that were really lifting the whole indices of the rest of the market, like Nvidia and Apple and Google, Amazon, Tesla. Those names were pretty much lifting the rest of the market. But I think this year we're seeing a lot more sectors, a lot more groups taking the leadership role. And one of the reasons why that leadership role has been expanding and broadening out, especially on the NASDAQ, is due to the Russell 2000, right? The Russell 2000 stocks, when we look at breadth, every stock gets one vote. Well, you have the S&P 500 has 500 names. The Dow Industrial has 30 names. The NASDAQ 100 has 100 names, and the Russell 2000 with 2,000 names, right? So it has a huge amount of influence on the breadth and of the market. So as long as that Russell 2000 is in a leadership role to the upside, I think it can carry all their other indices as well too. And oh, by the way, we're going to get some really good numbers probably later on this month from some of these small cap names when they report earnings towards the end of April and the beginning of May. I just think that's the case because a lot of analysts have started to up their numbers for some of these companies and some of these names. And as they do up their numbers, stock prices tend to rise along with it. So that's going to be an interesting. It's going to be interesting to watch the earnings season for this quarter. So don't forget, last Friday markets were closed, but we did have some news come out. We did have we had that PCE number, personal consumption expenditures number came out, and it was mostly in line to slightly lower than expectations from some of the economists that put forecasting out there. I think it was a good number. I think it was a number that the Fed is going to be pleased with the direction and the trend of inflation. And a couple hours after this report came out, we did hear Chair Powell make some comments at a conference saying exactly the same thing. And I think that he's looking at these reports and saying, look, you know what, we've done a really good job with higher interest rates, higher for longer, which is what they said from the beginning, and nobody seemed to believe them until they get to to April of 2024, and we're still at 5.25%. So higher for longer. And I think that the Fed is going to be looking at perhaps 2 rate cuts in 2024. It was leaning about 3 months ago to 2.5. I think we're leaning towards 2 this year. unless a big drop in inflation happens or a big drop in the economic growth happens. Now, we'll have a jobs report later on this week on Friday. We'll talk a little bit about that on Thursday, and then we'll see what happens with the with interest rates after that jobs report comes in. If it's a strong jobs report, we'll see interest rates starting to rise again, and we'll see probably less of a chance of more rate hikes coming in 2024. So that's going to be it, folks. Just a quick reminder, and I'll remind you again on Thursday, we have another webinar coming up on Thursday after the close at about 4:40 p.m. on Thursday, April 4th. Okay, this is the big one because we're going to be talking about the internals. What are the internals? That's this octagon right here. We're going to be talking about all these little different indicators that are on this box here, what they're all about, why we use them, why they're important, and how they influence how we trade regularly during the day. So don't miss that one. That's going to be a good one. This is a new webinar that I'm talking about. I talk about this, the octagon in the Market Blast every single day. I talk about it in the chat room and sometimes here in the Daily Bite. So this is a good chance for you to really sit down and listen and understand what this is all about. So I'm looking forward to seeing all of you guys there. I've sent some invites out on social media, in email later on today. It'll be in the chat room as well too. So make sure you sign up. It's only about 100 slots available for this webinar. So I hope you guys get a chance to be there. So have a great day, everyone. I appreciate all of you guys spending a little bit of time with me this morning, as always. And we'll see you guys all on Thursday morning, April 4th. Have a great trading day. If you're in the chat room, I will see you guys a little bit later on today. Don't forget, keep some cash, pull some profits off the table if you have them. Take some money off and buy some puts, keep some protection on, et cetera, et cetera. That's how we play the game. All right. Have a great day, everyone. I'll see you guys all on Monday. Bye.